Hi guys, welcome back to my channel. Kelvin here. Warren Buffett once said that for most people, the best thing to do is to own the S&P 500 index fund. And the S&P 500 index fund consists of the largest 500 companies in the US. But did you know that there are actually like 4,000 over companies in the US? So now, here's a question. Should we just invest in VOO, which has the top 500 US companies? Or is it better to invest in VTI, which has all 4,000 US companies? Because, you know, diversification. If so, why did Warren Buffett only recommend to invest in only the top 500 US companies? So, in this video, I'll be comparing the two ETFs and let you know which you should invest in instead. But before I start, I would greatly appreciate it if you can help to tap the like button because it will help out with the channel. In return, I will show you a dog getting a head scratch. Alright, let's start right now. Okay, both VOO and VTI are ETFs offered by Vanguard. Fun fact, you can easily find similar ETFs that track the same thing. For example, for the S&P 500 index, you have IBB, SPY, SPLG, and VOO. And when you compare the performance, all of them give very similar returns. Then you'll be like, why are there so many similar ETFs? Is it multiverse? Not really. They are all the same thing. The reason you have so many similar ETFs is just because different companies come up with their own versions of the ETF. So just think of it like burger. You have McDonald's burger, Ramly burger, KFC burger, A&W burger, and so on. Okay, back to VOO and VTI. To understand which ETF is better, let's first compare what are the differences between the two ETFs. For this, I'll use the ETF comparison tool at ETF.com. First up, expense ratio for both ETFs is 0.03%, which is super duper low. This means that for every $1,000 you invest, Vanguard is only earning 30 cents. Low until I don't even know how they are paying their employees. Pay with air and rainwater. For the number of holdings, VOO only has 508 stocks, while VTI has got like 4,099 stocks in it. Okay, here's something you need to know. VOO will always have 500 stocks because it's S&P 500. One does not simply make S&P 500 has 600 companies. So whenever there's any stock that underperforms, it will be kicked out of the index and replaced with a better stock. On the other hand, VTI has all the listed stocks in the US, which means as more and more companies are listed, VTI will have more and more stocks. Okay, yeah. Next, if you look at the top 10 holdings, you will see something interesting. The top 10 holdings for both ETFs are exactly the same. You have the fruits company Apple, Microsoft, Amazon, all the way to Johnson & Johnson, which makes the strawberry shampoo that I like. Before I continue, here I have to explain something. In ETFs like VOO and VTI, the weightage is not equally distributed among the stocks. Like if VOO has 500 stocks, it doesn't divide by 500 stocks. No, they don't do it here. Instead, their weightage is based on their market cap. If you don't know what's market cap, it's basically like this. You have number of shares, you have stock price, you have market cap. For example, Apple stock price is around $160 US. They have 16 billion shares outstanding. If you multiply both of them, you get the $2.73 trillion market cap. So back to the top 10 holdings. Because their market cap is so big, you'll see that there's only a very small difference between the weightage. For VOO, Apple consists of 7.1%, while for VTI is 5.97%. Or for Tesla, VOO has 1.98%, while VTI has 1.65%. This makes sense because VTI has a lot more stocks, and they need to allocate some percentage to other stocks. But overall, the top 10 stocks still have a very high weightage in both ETFs, VOO at 29% and VTI at 24%. As you might expect, the top 10 stocks will affect the index a lot more compared to the other stocks, which may just be like 0.00 something percent. Next, let's compare the sectors. You can see that the percentages are more or less the same, like communication services in VOO is 9.98%, VTI is 8.91%, consumer discretionary, VOO is 11.92%, VTI is 11.59%, and so on. So again, there's not much difference between VTI and VOO. Okay, here's why. If we compare the market cap, we can see that VOO consists of many large cap companies, while for VTI, only 87.5% is large cap, 9.57% in mid cap, and the remaining in small cap and micro cap. So this means that the mid, small, and micro cap companies is just around 13% of the VTI. That's why in terms of top 10 holdings and sector breakdowns, there's not much difference in percentages. Next, dividend yield. VOO's dividend yield is about 1.28%, while VTI's dividend yield is slightly lower at 1.22%. This is expected because VOO consists of larger companies, while VTI consists of smaller companies. In a business life cycle, if the company has matured, it can't grow that fast anymore. Instead, they'll pay out a part of their profits as dividend to investors. Meanwhile, smaller companies are still in the introduction or growth phase. They are still trying to survive or grow, and they would rather reinvest the money in themselves. And that's why VOO has a slightly higher dividend yield compared to VTI. Okay, so far we saw there's not much difference between VOO and VTI, other than the number of stocks. But now, let's compare the performance here. I'm comparing the 1-year performance all the way to the 10-year performance. We can see that VOO has so far consistently outperformed VTI. Especially for the 1-year performance, VOO actually outperformed VTI by almost 5%. But why like that? I thought most of VOO is in VTI? Because magic. Just kidding, there's a reason. Let me show you why. Here, I'm comparing VOO against VTI. Then there's 3 more ETFs. VB is small cap, VOO is mid cap, and IWC is micro cap. We can see that in this 1 year, VOO, VB, and IWC all gave lower returns. That's why VTI gave lower returns during this period. If I expand to a 5-year period, same thing. VOO, VB, IWC all gave lower returns. That's why VTI gave slightly lower returns compared to VOO. But does this mean VOO is better than VTI? Not really. If you look at the difference in performance, the more years you have, the difference becomes smaller. Like at the start, it was a 4.72% difference, then at the 10-year, the difference drops to 0.39%. This means that over the long term, VOO and VTI should give very similar returns because of something called mean reversion. Basically, no matter what's the volatility and historical return in the short term, they will eventually revert to the mean. This means that even though in the short term, the performance may be very different, but over the long term, VOO and VTI should give about the same return. Let me show you using a portfolio visualizer tool. The starting year is 1972 all the way to 2022. Let's assume I put $10,000 at the start into both portfolios. And tada! Here's the result. Both give very similar returns. If you look at the final annualized return, it's only a 0.03% difference. The standard deviation is quite similar too, meaning both stocks have about the same volatility. The performance in best year and worst year are about the same. So after all the comparisons, we can see that there's not much difference between VOO and VTI if you invest over the long term. Okay, here, let's see what the experts recommend. Obviously, we know that Warren Buffett preferred S&P 500. He even asked his trustee to invest 90% of his money into S&P 500 after he's gone. The reason is because Warren Buffett feels that S&P 500 consists of large cap stocks, which are all big winners. And you definitely won't go wrong by investing in big winners. Then what about John Bogle, the inventor of Vanguard 500 fund? John Bogle used VTI in his personal account and he recommended people to use it. The simple reason is because he believes in diversification. Next, if you look at the top US financial YouTuber, Graham Stephan, he prefers to invest in S&P 500 index fund, while Andrei Jikh prefers to invest in VTI. So it seems like both VOO and VTI are equally preferred by the experts. Then how? ¿Por qué no los dos? Okay, it's pointless to invest in both VOO and VTI because both give about the same returns. It's like buying McDonald's French fries and KFC French fries just because you couldn't decide which is better. So let me show you what Vanguard themselves think, because surprise, surprise, they actually have a preference. In 2018, they stopped offering S&P 500 index fund in their employees' retirement plan. That's because they believe that the total stock market index fund is the best proxy for the US market, offering exposure to large, mid, and small cap stocks. They didn't like the S&P 500 index fund because it only focused on large cap stocks. And there you have it. Vanguard themselves think that VTI is better than VOO. But if you ask me, there's not much difference. So here's my recommendation on how to choose. First, if you prefer more diversification, go for VTI, which has like 4,000 over stocks. It will give you diversification gao. Second, if you prefer to invest in the best companies in the US, go for VOO. The benefit is that larger companies have better financials compared to other smaller companies. When times are good, larger companies can give much higher returns. Then finally, here's one more thing. Google effect. Basically, when the stocks announce that they'll be added into the S&P 500, investors and apes will tend to pump up the stock for a while. In 2006, when it was announced that Google will be added into the S&P 500, the stock went up by godlike 7% in one day. And because of that, VTI, which had Google, gave slightly higher returns compared to VOO. Or in 2020, when it was announced that Tesla will be added into the S&P 500, the stock also went up by a lot and it gave slightly higher returns to VTI. But again, in the long term, it doesn't matter as the returns will revert back to the mean. So anyway, that's a quick comparison between VTI and VOO. You definitely won't go wrong with either choice. But comment down below and let me know which do you prefer. Like, share and subscribe as I'll be posting new videos every Monday, Wednesday and Friday.